Hi, my name is Gordon Ubak, and today we are going to be talking about Forex. And I'm going to be sharing my holy grail strategy that works 75% of the time to 90% of the time. Now, this strategy does not occur, or this setup does not occur every day. And if you are a type that wants to trade every day, you will not have it. So just clear your mind of that and hold steadfast that you will not see setups every day and you will not have to trade every day. But when you do, you'll be making money. Now, I call my strategy the Holy Grail because it is good in a trending market and also in non-trending markets. Reversal, it is good in all scenarios. But the only criteria is that everything must be fulfilled. I won't share everything because it's a Holy Grail, but I'll share majority of the things you need to know. Now, for example, let's say I don't want to go into deep, make the lesson very short. Let's say we are somewhere within this point and we don't know what we want to do, if we should buy or we should sell. So basically, what you would do is you want to buy low and sell high. That's the old phrase in the book: buy low, sell high, and buy low. So you want to mark out the previous day's highs and lows. I'm just marking it out from this point because from here you can see it. When we go down into the lower time frames, I won't be coming back here again. So I want to use this as a reference point. So I will take highs as red and blues as yellow. So we have to scrub this and get where we want to get, which is the 15 minutes time frame. And also be making reference to the 1 hour too, but let's use the 15 minutes. So this is that day, and I want to make something clear. We'll be buying lows and selling highs, but there are criteria. Now, if price takes out a low, we want to see an optimal entry, so we can go what for a buy. And some of the criteria are: one, it should leave the London Open, the New York Open price, or let's say New York Midnight Open, go down, take out a low. But before it does take out a low, it should create a temporary swing high before taking out that low. Now, when it does that, we want to see price move with momentum with at least 3 to 5 15 minutes candle up above and retrace back down to at least 60 to 50% retracement level on the fib level, and it should start pumping from there. I'm sorry for the disturbance, that's my dog. Okay, and it should start pumping from there. We want to see the price break past the New York Midnight Open and be reaching for highs where liquidity might rest, because there are people who sold from there, and taking them out will give the market more momentum to go higher or possibly go lower. And for sells, we want to see the market open below a high. The New York midnight open should be below a high. We want to see price leave the New York midnight open, go high, create a temporary swing low, take out that high, then break with momentum with at least 3 to 5 15 minutes candle, then retrace to 60% or 50% of the fib level, and want to see price reach for old lows. Now, because that's where liquidity lies, the reason why we needed to create a swing low is that there are stop loss orders there. When those stop loss orders are taken out, it will give the market more momentum to push higher. So basically, giving it momentum would certify for further movements. That's why we need an old high to be created or an old swing high or swing low to be created and taken out. So we know that yes, there's liquidity in the market. There's always liquidity in the market, but those are just a criteria that I have to be fulfilled in order for me to qualify the entry. And the third is buy continuations. Now, if price breaks past a high, then we don't know what to do next, right? Or it closes after breaking past a high. It closes not at approximately that high. It can be far away from the high. It can be below the high, but takes the high out, then retraces back a little. Then that is the end of the move for the day. Then the following day, you have to know the buys will continue. We mark out our New York midnight open again. After marking it up, like it's a horizontal line, just mark the open price a horizontal line. We want to see price move away from that. Okay, I'm trying to visualize this because I have it upstairs. We want to see price first of all create a swing low because it might have come down or done a little consolidation. You want to see price take out a low, then move high above the New York midnight open, take out another this in high. The first one was a low, take out a high. All these highs and lows I'm mentioning are not higher time frame highs. They are liquidity created when price did a retracement after taking out a high. So it forms these patterns in preparation for the following day. It's an algorithm, so everything is planned. When we see price take out the low, then take out the high, leaving the New York midnight open, we want to see price take out that high with at least 3 to 5 15 minutes candle. That has to be a strong momentum. Then when it does that, we want to see a sharp decline, a retracement to the 60 to 50% level. And the reason why I said that I want it to create a low and a high is that the low created, let's say price dropped after taking out a high. So now we have a high point and a low point of that drop. Let's say you're looking at a mountain. You have the highest point of that mountain and the lowest point. Or let's say the lowest point. So you want to see price go below that lowest point, take it out, then move above and take out the what? The high. Or you want to see price as it was forming that low, move up with momentum, break past its open price. The reason why I want it to move down from the create a swing low is that I want price to leave the New York midnight open price, dip down a little, then move up. That dip down is always a fake move, and it always happens during London session. So that is the first fake move of the day to get people to think, oh, price is going to go this way. It's like a trick in the book. So after that, price does what? Moves higher, then um, takes out the high, retraces, and continues pumping. The opposite goes for um, a sell continuation. So let's dive right into the charts while I show you a few things. Okay, this is on Monday. This vertical line, you can see the date and the hour. So let's move it to what time? New York midnight open. Okay, let's close the price. Let's expand this. That's basically the price. We don't want to make it, so I'll draw my horizontal line from that price range. Now, if you look closely, this here this here is the previous day's low. So what did price do? It took it out. So let me mark out the previous day. Where did the previous day begin? That was Friday. So somewhere around this corner. So you can see the high of what, Friday right there, and this green line, which was New York midnight open, the low of Friday. So price does what? It takes it out. Takes it out right here. You can see here. So after that, I said we want to see price run with at least 3 to 4, 3 to 5 minutes, 15 candles. And let's see what price did. So here was 3, but what happened? It did not retrace to the 60 level, so we will not enter. And what did price do again? It took another high. Now the criteria here has been fulfilled. You want to see, according to the rules I made, you want to see price, leave the New York midnight open price, go down, take out a low, then come back, take out a high, retrace to the 60 what 50% level, then continue buying. And you can see highs here. I take that to first high taken out, and second high here taken out. So, and after that, you want to look for the first swing low or a swing low relative to the position that you are. We measure it and want to see a fair value gap too. So how many candles from the swing low? 1, 2, 3, 4, 5. size 5, and we have a fair value gap here. Where's the swing low? The swing low that started the what? Fair value gap. So which would be here. We measure it from here to here. So what? This hits 78 level, but it hits what? 61.8 and 30. 61.8 and 50. 50 is in green. So we want to enter at 61.8 or 50 level. But let's say we entered at 50. Our stop loss should always be below the swing. Swing what? Swing low. So let's say we entered somewhere around here, 50 level, and I use on my fib as the graduation. The maximum point I want to take TP. But when I take my TP, my take profit, I usually open a lot of positions. They are small. Let's say I want to open a 1 lot size. I will do 0.5, I'll do 0.25, 0.25 at my entry. I needed 1 lot size, right? But I'll do 3. And when price moves in my favor, if price moves in my favor at least 10 pips, what I do is that I look at the markets and search for other OTEs, optimal trade entries, and if it gives me that, that is where I'll continue doing what? Stacking my positions. That's only if it gives me another OTE without taking out another high. That's another high, another major high or a day's high. So because if price takes out a high of a day, unless it's a high impact news day or a very volatile day, there's always a reaction. But on a news day or on a less volatile day, price will usually react to a previous day's high. So what does price do? And mind you, all my trade should be done around 3 o'clock New York time. So by 3 o'clock, any trade that I was in, I am out. So what did price do? I'll delete this. It gave us another optimal trade entry. So you can see from here where it took out, where it gave us an entry, here, made another low. So if we measure this, look, it took out this high. If we measure this, it gave us 3 optimal trade entries, 1 and 2. But I only scaled it in 1, which was this one around here. I didn't take this because I thought it was too close. Took this particular one. So let's see, from this to this. Remember, we always doing what? Entering from 60 to 50, but for this price move, we are entering at 50. So I normally target that. And I start taking profits from the original position or from basically any price I see that is not moving very well for me or is not sitting well with me. I TP there and just let the rest run. If it's going to the moon, sure, I'll take the run to the moon, but immediately it hits 3 o'clock, I'm leaving the trade. So, okay, I will do what? Delete this. If I let me leave that price, delete this. So now we have the low for the day, and we have the high for this particular day right there. So what did price do? Okay, um I'm going to go the next day because I'm closing on my trade by 3. I'm not taking another trade, so even if it gives me setup, I'm not taking it. It's 11 o'clock. I'm tired, but I say let me share this strategy because it's been working, and I don't think it's going to stop anytime soon. So um where's the vertical? That's the horizontal line. So this is the what? New York Midnight Open. So what the price did, it formed a high, a lower high. So when price opened the following day, took out this high, then dropped. As it's dropping, our target should be this low right here, and this low, because that's the day's low. We want to see reactions at these levels. Now what do? We see price run run away from us, and this is our fuse that we're not taking the trade this day. So price runs down. So there was no trade this day. There was no trade, and we wouldn't have taken it, but price did run in our favor. And also people will say we could have, since we know price is going to take out a high, then break with the fair value gap, take out what? A low, then we trace, then we short it from there. Why didn't you do it? Now, the reason I'm saying this is that you shouldn't be looking to do that. You don't know what price wants to do. But what we want is a confirmation, and we join in the move. Take out this move, take out the low, retrace, and give us an entry. It did give us an entry, but it wasn't up to the level we needed. Remember, you said you needed a holy grail. So you just have to stick to the rules. You don't have to trade every single day. So that was Tuesday. So now these highs are still valid. So I'm not going to delete those two red lines. Price has not taken any one of them out. Instead, it only tapped. Look how it just came. Tapped on this previous day's low. Did not take it out, just left it alone. I am tired. So what do we want to do for a price continuation? We want to see price leave a New York Midnight Open, take out a low, take out a high, then continue doing what? Running forward. So we want to see price do that. here we see price do what? Take out a high, but it did not take out a low. So according to the criteria, price should take for a sell, price should take out a high, take out a low and retrace. Now this is the reason why I said you need a holy grail strategy, then you have to be willing to let price do it, show you the green lights, then you follow. So these are the points where price should have least taken out. You get the points. You don't need to draw all this. Okay, 26 minutes. I was just trying to explain a few things and time is just running away. So takes out a high but not take out a low. Remember we say you want to see price for a buy, you want to see price leave the midnight open above and continue running. So since it did not take out a low, it means the room for buy continuation is still what? Open. So since it's still open, we need price to take out a high, give us a retracement to the 60% level or 50, then we do what? We buy. And what does price do? It takes out a high. He left this high. Now what happened? He took it out. So when price takes out that high, what do? We are looking for a retracement to the 60 to 50% level. So we draw it. This is the latest before the move. Mark it out. Where was the move before the drop? So this is that move before the drop. And a lot of people have seen what? They've seen price liking to hit the 0.786. You say, why are you not using the 0.786? The reason why I'm not using it is that if you increase the accuracy you want, you will miss a lot of moves. You will miss a lot of moves. So let's see. According to the graduation, what do? Pick our entry at 50, 50 shit for the drop. So we take it all the way here. That would be about 1 is to 4.79. We are risking how many pips? Let's look at that. I'm like, okay. Where is if where is 3 o'clock? We're looking for 3 o'clock. It's just around that area, so you wouldn't get your full move. Instead, that's what you would get. You would get a risk reward of 1.88. Maybe you've gotten something, and this day there was no second entry. No second entry because price was just moving slowly but surely. So let's see for the last day if we would have an entry. Because I want to stop this I'm recording before it hits 40 minutes. So we say, do you remember what they're doing about daily highs and daily lows? That when there's news, price does not react to them. Majority of times, it just melts through them. But after the news, we might see a reaction or no reaction at all. Price just moves away. It doesn't have to be news, but that's how price usually does. So we see price, these two red lines, those are what? Previous days highs and previous days. This was Monday's high, Tuesday's high, and this part would be Wednesday's high. So Wednesday's high is somewhere around here. What about its low? Oh, this fib. So this is its low. Wednesday's low. So we turn that to blue. Now we want to see a reaction. Okay. Mm-hmm. So price opens, we have a high and we have a low. So what does price do? Okay, now remember what I said about fair value gaps being 4 to 5, the candles that form the fair value gaps. This is it. Before that move, you see 1, 2, 3, 4. So 3 to 5. 1, 2, 3, 4. It formed 4, then give us the entry. This day there was no entry. Here it gave us 3, there was an entry. It gave us 1, 2, 3, 4, there was an entry. How many? 1, 2, 3, 4, 5, and there was an entry. Now, here, what did price do? Price did not take out a high, right? It did not take out this high. See, price opened somewhere around here. It dropped. It took out this low that it had formed, but did not give an entry for a sell continuation. Continued dropping all the way. It dropped. Now, after taking out this low here, you can see this was what? Should I call that a low? Yes, because they are down close candle before an up move, and for a high, up close for this is a swing low. So they are down candles. I'm looking for what to classify as everything swing low down candles. So yes, he took it out. Then after taking it out, what happened? It gave us how many candles? One. It took out this high. Gave us 1, 2. So there will be no entry. You would miss this move. You would you would miss this move. It's not my fault. It's the strategy's fault. It's supposed to give us at least 3 candles. Then we would enter. Target previous day's high. He gave us that. And the day ended somewhere around here. That's 12 o'clock. So if you see in 1 week, you did what? You started on the week started on what? This was Friday. You didn't take any trade, but you came in on Monday, struck one winning trade. It was not that big, maybe 1:2, but you got something out. And you came in again on Tuesday, no trade. You come in again Wednesday, you take a trade, you get, let's see, 1.88, and you strike again. Let's bring this out to, let's say you get 1:2. So two, you have 3.8% in your account. You see this setup, but are the criteria fulfilled? Yes, it left London Midnight Open, took out a low, retraced, but there was no fair value gap. There's a gap in an inefficient price delivery. You will not have that. We have all these wiki candles, a retracement. This retracement might as well be a reversal that could just pull up, take out this high here. So we wait for a fair value gap. It did not give us one. It did not give us one. Instead, let's see. If we take from here to where is that move that formed it here? Okay, how many candles? This is the place of entry. If you are really looking for sales, this is 50 to what? 60 to 50. That's the level. Okay. Now, if you're really looking for sales, you would have gotten it. It would be 1, 2. Oh, you wouldn't have gotten it. There are not, there are no three. There are not three fair value gap candles. It's only two. 1, 2. We need at least three for the criteria to be fulfilled. You wouldn't have gotten any trade. You got 1, 2 here, and you also got 1, 2 here. So the criteria are not met. You have gotten 3% on your account on only two trades. So I will leave you. Don't even bother. You wouldn't have gotten this trade because this might as well be in the news. Price was consolidating within this up close candle. You see what it did? It just came into this range, move, but then it broke properly. Then it came down. Now you continue asking me, why is it that I don't take trades when they are falling like this if I know that it's going to be a sell and this is a high? There is nothing that is for sure in this market. So I only play according to the rules that I've made and I've seen that are working. Those are the only rules I play by. Those are the only rules I play by. So we'll catch you next time. Just practice this and only implement it, nothing else. If there is no price delivery, do not take them. And if the candles are more than 5 and the price starts dropping, do not take this kind of trade. Do you know why? They are reversals. And if they are not fair value gaps, do not take them. Because if the candles start retracing and you take them, they are reversals. The reason why I use 3 to 5 is that is enough time for price to do big moves. Like to get itself ready for a move. While if it takes more than that, it means it requires large funds, large capital to make those moves. So why would a, let's say, a bank or anybody in particular waste money just to fulfill your setup for you? No, they don't do that. Instead, if the price went up too fast, there are other people that are willing to buy. So they'll do what? They'll return the price or reprice it a little bit. Like it's kind of a bargain. They'll reprice a little bit for them to enter. Then after that price does what? Starts moving. So in moves like this, I would say this is a premium market for only those who are really affiliated with the market. These are people that catch this kind of moves, or people that gamble. They see it, or people that have mastered. I wouldn't say mastered, like have a keen sense on the market. I will not expatiate more on that, on how you will capture this move. But if you're really inclined, you would not get it at the very top, get it at the bottom. You have one, two, three fair value gaps candle. Let's see. Vision there. You get it at the 50. For those that were saying, why are you not taking it at 70? Why are you always taking it at 50? Have you seen now that because you were taking at 50, you would have gotten an entry, and you have gotten two entries in particular, and they are not reversals because what? They fulfill the criteria of the Holy Grail strategy. Have you seen? 50. Oh, your surplus should always be above the swing highs or the swing lows if you are selling. I mean, if you're buying. Now, you missed all this move, but do you have to always be right? Do you have to buy at the real top? Are you gambling? Look at what happened. We said, what should price do if we are looking for a sell? I don't want to expatiate on this particular market, but let me just do it. So price open somewhere within here. Already it has taken out this high. It drops. Took out this low. Now we want a retracement, right? Retracement to what? That 50% level. But no, price did what? It formed a swing high, took it out, then retraced. Very simple. It gave you the entry right here. And what time will you stop trading? By 3 o'clock. So if you enter somewhere around, let's see, you entered here, TP around here, and that is 1 is to 2, and you also entered here. Now what do you see? You already had 3% on your account on the first trade. Now on the second trade, you have 5% now. You entered how many positions? 2 positions. Let's say the first one you took your real risk, which is like 1%. So you made 3 plus 2, that is 5%. Then this, let's say you took minimum risk 0.5%. So I'll divide it by 2. You have 1.5% now. That will be 6 plus 5.5 and 0.6 that we had there, that would be 7% gain. 7% gain on what? Your account. Now in 1 week, you've done what? 7%. Now you've seen that you only took how many trades? 3 trades. One, two, 1, 2, 3. And you're not gambling. You're not gambling. You're looking for specific setups and due to the specific setups you take. Now there will be times where the market consolidates. In those days, to show you how safe this strategy is, you will not see you will not see a setup for almost a whole week. For almost a whole week. Sometimes you only see one setup throughout the whole week. And that is if you're on the chart and you're looking at it. And they happen. And majority of the times they happen during London and New York session. Those are the only time you particularly see the setups. London and New York. If it doesn't happen in London, it will happen in New York. Those are the specific times where you will find this setup. Now, I hope this has given you insights on how to trade. Now, I know a lot of people who try to twerk this and do all sort of shit with it. I don't really care. The more you twerk and try to make it your own, the more you do what? The more you fail. If you want to make this strategy your own, do not twerk it. If you want to twerk, do not twerk those moves that might occur. You might name it, you might do whatever you like, but do not twerk those parts. If not, anybody that uses it will fail. Write down the rules, take them to the take them with a cup of tea. Not even with a cup of tea, take them as they are, so you don't dilute anything. And surely you see yourself becoming profitable. See you on the next video. Gordon Ubak, peace out. Damn, I just told myself peace out. Good night.